The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon in the East Coast and good morning on the West Coast. Welcome to this edition of Accountants University by Intuit QuickBooks, pricing your accounting services with QuickBooks Online and wholesale discounts. Let me just double check that my audio works well, and let me pull up a polling question. And I'm going to ask you through the polling question just where you're located. And then after you answer it through the polling question, just put in the questions in the question section, the city and state that you're from. Okay, perfect. So we got people from Ohio, Texas, Sunrise, Florida. Hey, oh, I know that guy. Let's see, Louisville, Kentucky, California, Georgia. Yeah, from all over the country. Yeah, we have almost 200 people logged in today live. So it's really, really good. Okay, so we have about 95% from the US and 6% from Canada. So hello to our neighbors from Canada. So I'm not 100% sure if the Canadian version of QuickBooks Online has the features that I will discuss here. So I can't really tell you a lot about that, but for sure the US version will have that. All right. My name is Hector Garcia. I'm a CPA and I'm from Miami, Florida. I practice and have my regular accounting practice and QuickBooks consulting here in Miami, Florida. I'm an advanced QuickBooks certified pro advisor, a member of the Intuit Trainer Writer Network, and a member of the Intuit Council for this year and next year, and a top 100 pro advisor for the last 3 years. Again, as I said, today's topic is pricing your accounting services with QuickBooks Online and wholesale discount. Take a look at the handout section and the chat. In both places, you have the ability to download the slides if you want to work with the slides, and you can also download the guide. Now, I strongly recommend downloading the guide. It's really, really useful. I want to open it up real quick just to show you what the guide looks like. It's right there on the chat section. You should see a guide that looks like this. This is basically more of a readable version of this webinar, and you can go step by step, follow along. Strongly recommend that you print that and maybe use that as to take notes. But you can also, of course, use the PDF of the slides as well if you want to follow along. I recommend you have both available just in case. CPE. So this will be a CPE eligible webinar. It will be eligible for 2 credits for 2 hours. This webinar is going to be approximately 100 minutes long. It may go over a little bit. I don't think it'll be anything under. Actually, it can't be anything under because it's 2 hours of CPE, but it would be roughly about an hour and 40 minutes, an hour and 45 minutes. It's a lot of topics to cover, and you will get the 2 credits as long as you're here throughout the entire webinar logged in. And we're going to give you some keywords. We're going to give you 2 keywords, 2 passwords along the way. You must write those passwords down. And then towards the end of the webinar, we'll ask you what those 2 keywords are. And as long as you answer them correctly, we will automatically issue you your certificate and email it to you within 14 days, within 2 weeks. And keep a copy for your records so you can have that. We don't really have a CPE archive system that you can pull them later. So that email with it would probably be the only way to get that certificate. The agenda for today is going to be divided into 4 sections. We're going to talk about traditional versus modern pricing models. So we're going to just do a deep dive analysis at our profession, accounting and bookkeeping profession, and how we priced in the past or how we've been pricing for a very long time, and the reasons why and some of the pros and cons around some of the traditional pricing models. And then we'll discuss some of the modern pricing models, the different ways that different people price because they've been adapting to today's customers, which are asking for services that are a little bit different than they used to be before. So we not only have to adapt what we serve, what we do and the type of services that we do, but we also have to adapt how we price it. Then on the second section, we'll talk about the transition to value pricing. This is a little bit of my own personal experiences transitioning some of my firm to value pricing. some of the conversations I have with my clients, some of the research I've made about what are the best ways to have conversations with your clients, all driven and focused on value. Okay, so that's what that second section is going to be, and that would be the first hour or so. First hour to first 50 minutes or so would be the first two sections. Then on section 3, we'll talk about bundling the accounting software and apps. So we'll talk about the concept of bundling, the cost involved with that, what happens when the accountant takes over the cost for the apps and the software, and how that changes how we price as well. So that all ties in together. And then at the very last section, we'll talk about wholesale discounts. And wholesale discounts are how QuickBooks Online Accountant gives accountants that have multiple clients a better price on QuickBooks Online in order to be able to offer it to their clients and include it in their accounting services, in their built-in accounting services. So that's what those 4 sections are going to be. Now, please check out the chat for the link to the slides if that's what you are looking for, because I see some people asking for the slides, and then you're going to be able to get that through the chat. So you can get the slides and the PDF guide that I mentioned earlier. The learning objectives for today are broken down into 4. First learning objective, identify the differences between traditional accounting pricing models versus modern accounting pricing models. Second learning objective is we'll learn the value conversation. We'll learn the techniques and how we implement modern pricing models that are focused on value, with the term value pricing, and both for existing clients and new clients. So we'll kind of discuss both scenarios. And the third learning objective is we'll recognize the impact that technology has on pricing and apps and QuickBooks Online, and how we can bundle them. And the fourth learning objective is we'll learn how wholesale discounts with QuickBooks Online works and how to implement it in your practice right away. So let's start with traditional versus modern pricing models. So this is the first section. First, there are 5 most common pricing models in almost every accounting practice. You may find yourself using some of these, all of these, some in combination, maybe just one by itself. So hourly rate, there's 2 approaches to hourly rate. One is the cost plus markup method, which means we basically figure out how much it costs for our employees or maybe our own time, and we add some sort of markup to that, and that's how we come up with the hourly rate. So that's obviously a traditional method, not a modern method, but that's a traditional method. Then there's a different hourly rate in which we're not really 100% focused on the cost plus, but we are focused on market price or a published price. So we have this expectation that, the customer will only pay $75 an hour for this service, or $100 an hour for this service, or whatever. And then we base the price based on what we think the market rate is, or maybe a published rate that we put. So those 2 are the ways that we pick an hourly rate. Then there's the fixed rate, and the fixed rate is almost pretty much like an hourly rate, but based on a pre-calculated amount of time. So normally you take a predetermined service like reconciliation of 3 bank accounts, 2 credit cards, no more than 300 transactions a month. That service is going to be $300 a month. That's what a fixed rate is. It's sort of packaged based on a predetermined scope. But this is pretty much the same thing as an hourly rate, just a pre-calculated number of hours. So these 3 are the traditional methods. Now, in more modern methods, there's value billing and value pricing. Value billing is when you have a really high level of trust with the client and you have this sort of open engagement. You do the work, and then once the work is done, the provider sets a price, right? I mean, this happens all the time with tax returns. Clients come in a hurry, they bring their documentation. We've done taxes for them for several years. We don't talk about price up front. We do the service and we come back with a bill. And sometimes it's bigger than last year. Sometimes it's smaller than last year. It all depends on what we thought at the moment the value of the work was. The problem with value billing is a little bit accountant-centric, not so much customer-centric. And then there's value pricing, which is the evolution of of all the traditional models and value billing into the most modern of them, which is an agreed upon price upfront between provider and customer after you have a value conversation. That's a really, really key component. The term value pricing has been used really broadly in the last 5-6 years. That has been hitting our profession pretty hard. Guys like Ron Baker and other thought leaders in the profession have been talking about this for 15, 20 years. But in the past 5 years, they've been using value pricing as a real sort of catch-all term. And I want to be really specific about exactly what value pricing means to an accounting practice. So let's go back and discuss the traditional pricing model. When we are working with an hourly rate or a fixed rate, the most important question that we ask ourselves as a firm is, how long will the work take? That's obvious, right? So once we understand how long the work will take, then at that point we'll give a price. Now, what's the problem with this? It looks inwardly. It's focused on productivity and efficiency. And efficiency is kind of a bad word in a modern practice, and we'll discuss why. The maximum revenue can only be achieved by having 100% utilization rate of your staff. There's a visible, achievable revenue ceiling. That means that if you want to stunt your growth or stop your growth, you want to have a traditional pricing method, because you will know exactly what is the maximum amount of revenue you can have, because it is tied to time. Okay? Even if they're quote unquote 100% efficient, 100% productive, and we're using them 100% of the time. Now, the only way to really increase profitability is to increase your hourly rate. And obviously, increasing your hourly rate with an existing client creates a little bit of a shock, a little bit of consternation. So that this is definitely not a customer-centric model. The other big issue with traditional pricing models is that effectiveness is punished or discouraged. In other words, if I charge by the hour and I get better and faster at doing my job, I'm going to, the next month or the following month, do the same work for an hour less, 2 hours less, and therefore bill the client less. So if I am getting better, my staff is getting better, we're adding more tools, or getting better educated, and we're increasing our effectiveness, which is different than efficiency. That is going to be punished or discouraged, and then it doesn't allow you to move forward as fast, technology speaking and innovatively speaking. Now, with a modern pricing model, better known as value pricing, the most important question that we ask before we come up with a price is, what is the solution we provide worth to you or to your customer? So when you think about that question in contrast to the other question, what is the advantage of that question? Number one is outward focused, right? So it's results focused. Effectiveness is the most important measure. Effectiveness is no longer punished, because as long as you achieve the desired result that the client values, you doing it better, faster, more efficiently, let's call it that, doesn't penalize your capacity to bill it. You can increase profitability simply by pricing your services attached to the value you provide. So you don't necessarily have to increase your hourly rate or increase your 100% utilization, or push all the way to 100% utilization, because we can simply price the services based on the value we provide, and then there will be no ceiling on the revenue. Okay, so these are the most basic concepts of the two, sort of the traditional versus the modern. Now, value pricing, as I mentioned before, is based on the value received or perceived by the client. That's a really important piece, because perception is reality. So as an accounting firm, we can, in our minds or in our firm, we can decide that our service is worth X amount. But if it's not perceived that way by the client is not getting the value out of it. And if the client doesn't get the value out of it, you obviously are doing something wrong, or you don't understand what the client's needs are, or you're not pricing accordingly. Okay, so the outcome or the result of the service, it's evaluated by the customer, and the provider who talks to the customer before doing the service can set the price before that service is delivered once that value is captured or understood. Now, value billing, it's an issue, okay? Because value billing means you don't come up with a price up front. You come up with a price based on what you think the client will pay or the client's willingness or capacity to pay, and that's done in arrears. Now, what I found, and I've been through this, once you do value billing, not value pricing, value billing, you find yourself adjusting a lot of invoices after the fact, where you come up, you finish the work, and this is very common in tax season. Look, I've been a culprit of it. We're doing 100 tax returns in a week, in 2 weeks, and we really don't have time to sit down and give a price. And then we're assuming that our relationship with our client is good enough or strong enough that when we later on say, oh, there was a couple of extra schedules, so I have to charge you a little bit more, that will be okay. And you know what? If for the most part, it actually ends up working. However, if the client didn't have that perception that you provided that much additional value, that may lower your client's loyalty, that may lower your referral rate, that may lower the repeat business. So that's why it's really important to have that value conversation up front and not take it for granted, and then and try to use value billing as a way to quote unquote achieve value pricing, but it's not the way to do it. Now, let's talk about some of the pricing strategies that people use under traditional pricing models. In other words, how under a traditional pricing model, we're talking about a fixed fee or an hourly fee, how firms used a strategy to try to increase that rate or try to be more profitable. So one of the things that they preached is differentiation, right? Be different, have a competitive advantage. Okay, this is just traditionally what we've been taught. As long as you're different and you have a competitive advantage, you can increase your rates. The other one is do it all. As long as you can do as much as you could possibly do, that means that all your staff is super smart and knows every aspect of the trade, not specialized, just complete generalistic. We can answer any question, quote unquote, resolve any problem. That's going to allow us to increase our rates. Obviously, a whole bunch of marketing, a whole bunch of promotion has to be pumped into increasing your hourly rates as well. Now, again, with the traditional pricing model, less hours to achieve the same result or same hours to achieve better results is the efficiency, which is the mantra of the traditional pricing model. Now, solving all the clients' problems immediately as they come up. And also, under traditional pricing models, protecting your know-how and protecting your trade secret was a really big deal. Now, I am not saying that we should do this or not do this. I'm just saying that this is the mentality we have whenever we're working with traditional pricing models. So I'm going to show you a little bit of the contrast. So when we're working with modern pricing models like value pricing or pricing based on the value that we provide, we have a whole different level of focus. Our focus is not about being different, it's about being unique. And there's a little bit of a difference there because in the world of marketing or business, being different is a term that is just very loosely used. But being unique means that there's no way that what you do, how you do it, and what you provide can actually be compared with another accounting practice, or it could be compared with another service provider. So by establishing that you're doing a unique service, not just you as a, very important, it's not you being different as a firm, is you providing a unique service, custom tailored to your client's needs. That's what I mean by uniqueness. Not that firm is different, therefore it's more expensive. Is no, that firm provides a unique, custom tailored service that solves my needs, that adds value. Also, trust is extremely important, of course, right? Because whenever you price something out of value, and value is very subjective, there has to be a high level of trust both between customer and provider. Also, social proof with today's modern communication platforms is really, really important. You get credibility by using video, other people on the internet saying that you're a trustworthy individual, that they work with you, your profile, your likes, your reviews, all that stuff strongly affects your capacity to build that trust and be able to have those value conversations and deliver pricing based on value. So also specialization or niche. So instead of being a do-it-all, a generalist, an accounting firm that can fix everything for everybody, you can provide much higher value by doing not just unique, but doing highly specialized, highly niched services. For example, one of my niches is inventory, but not just inventory accounting. I mean inventory everything, right? I'll wear my jeans. I'll go to the warehouse. I'll throw away some of the boxes with the client. I take huge pride on my client's inventory and everything that goes with it, not just the accounting, but the training, the maintenance. That is a highly specialized niche. I can provide a lot higher value by being an inventory specialist. Yes, to a smaller group of clients, that's true, but I can provide so much higher value than trying to be everything for everybody. The other thing is when we achieve the client's desired result, not my perspective of what my service is supposed to do, my client's desired result, we build loyalty, okay? And that is effective, okay? Doing the work fast is not effective. It's building loyalty. That's what's effective. Because even if you lose your shirt on a couple of deals in which you value priced or gave a fixed fee because you didn't price it correctly, let's say that, if you build loyalty because you provide results, that's being effective because loyalty gives you repeat business and gives you referrals. The other really important thing is when we focus on value, the value that we provide, we tend to improve our clients' lifestyle, help them achieve their personal goals, and improve the work-life balance. Once you have those value conversations, which we'll discuss briefly, you will notice that through those conversations, you will discover that although they are hiring you to balance their books, or they're hiring you to do their tax return, that's not really what they're hiring you for. Yes, that's what the social convention says. You call an accountant to do accounting services, but what they're really hiring you to do is to give peace of mind, improve their lifestyle, help them achieve their personal goals. Really, really important. And lastly, on a modern pricing model, on a value pricing model, we are more focused on sharing our knowledge and having transparent processes. So in contrast, on a traditional model, we are very focused on protecting our trade secrets and our internal know-how. That way we can, quote unquote, justify our time and justify our needs. But now it's all about sharing your knowledge and having transparent processes. I myself, for one, we're talking about Hector Garcia, the presenter here, I'm a huge proponent of that, and I have dedicated the past 2 years to giving away every piece of knowledge that I know, writing about it, posting it in YouTube, posting it in different websites. And in turn, when my clients contact me and we have a value conversation and I let them know what I have done for the community or what I've done for my other clients by showing them the knowledge that I have spread. And I even tell them, hey, listen, a lot of these things you can do on your own. Check out my content. It builds even more credibility and it really improves the perceived value that the client will get. Okay, because from a person that's been sharing knowledge for a very long time and is open and transparent about it, to now dedicate time to me personally, to that's the client's perspective, that has really high value. Okay, all right. So let's talk a little bit about something that we set a premise for, which is the concept of efficiency versus effectiveness. So when we look for efficiency, when we focus on efficiency, what we're trying to do is make sure that our employees are billing out all of their time. That, in our opinion, is efficiency. So using a $15 per hour employee to enter 100 transactions per hour, charging the client $75 an hour, and coming up with a budget, quote unquote, of 3 hours per month to enter 300 transactions. That would be an efficient way of looking at billing. Now, when we look at effectiveness, it's a little bit different. It's looking at the same exact service, the same exact result, but looking at it from a different lens, let's call it that. So when we approach effectiveness, we're going to figure out how much is it worth to the client to complete a 300 transaction reconciliation every month, right? So how much is it worth to the client, regardless of how much time it takes us? What value does that bring? And set the price and agree with it. And then investing in staff, technology, software, and streamline data entry processes, right? Share your knowledge within your firm to make sure that people are getting better and better at working. Utilizing downloads or bank feeds or integrating apps to deliver the same result with less invested resources. So it's not about how long it's going to take us and can we charge for a time. It's about understanding what the service is worth for the client, and then in turn we reinvest in getting our staff to be more effective. Okay, all right. So the summary for this section, and then we'll go ahead and check out the questions and post the CPE keyword. Summary for this section is, higher rates can only be increased if the higher rates can only increase revenue in a billable hour environment. And we're focused on efficiency and productivity, which is internally focused only. Now, higher price can be increased as long as we can tie the price to the value, and at the same time maintain our client base or reduce it slightly. I'm totally okay with reducing my client base if I can get more value out of the ones that I keep. Where we focus on effectiveness and loyalty, which is externally focused. Now, I want to break down a couple of quotes from some thought leaders in the value pricing world, and I'll just kind of give you my opinion about what they mean by that. And then these quotes really will help you think about pricing in another perspective. So Mark Wickersham from the UK is the author of Effective Pricing for Accountants. He says something that is very profound. He says, customers are not price sensitive, they are value sensitive. So what does he mean by that? So if you take a look at the cost of coffee in a supermarket, in a gas station, in Dunkin' Donuts, in Starbucks, and it's all about the same thing. If clients were truly price sensitive, they would only buy coffee from the cheapest source. But that's not true. I guarantee you that 90% of your clientele buys coffee at Starbucks. Why? Because the value that they perceive, whether it's the same product or not, the value that they perceive, it's high enough for them to pay the $3-4 a coffee, which they can otherwise pay less than $1 in the supermarket, probably about $2 in Dunkin' Donuts. So same thing with iPhone. Okay, iPhone, one of the most expensive phones out there. A phone is to make phone calls, right? You could buy an Android, not specifically the Samsung, but you can buy an Android that does almost the same thing, and it could cost, let's say, 40% less. But people still buy the iPhone. Why? Not because they're price sensitive, it's because they're value sensitive, and they're okay paying a higher price for something that gives them a higher value. So never think of your current clientele as, oh, they will never pay that price. Oh, they will never pay that. They can't afford that. Okay, and it's true. Some people can't afford. Some people literally ask for a lot more than what they want to pay for. That's for sure. Okay, that's for sure. Some people ask for a lot more than they want to pay for. That I would accept 100%. But once the value is presented and the value can be achieved, and the client understands the value, or they're the ones that tell you, yeah, that would be valuable for me, then it's much easier to set a higher price. Now, Peter Drucker, author of like a million books, but we'll just quote one. He says, efficiency is doing the right thing. Effectiveness is doing things right. So entering data into QuickBooks, that is the right thing. If your staff is entering data into QuickBooks 8 hours a day, not wasting any time, not hanging out on Facebook, not taking breaks, whatever, we can say, oh, that's efficient, right? They're entering data in QuickBooks. But what if they put it wrong? Or what if they entered in the wrong file? Or what if they could have downloaded that from the bank? What if they could have used a third-party app that will convert a PDF bank statement into QuickBooks Online or something like that and speed up the process. So being efficient doesn't mean that you're going to be profitable, and it doesn't mean that you're growing and getting better. It just means that you're doing things right. But doing the right things, it's effectiveness. So I find that quote to be really profound by Peter Drucker, and he's got 100 quotes. You can Google Peter Drucker quotes, and they're all fantastic. Joe Woodard says, a CEO of Woodard Companies and host of Skinny New Heights, he says, set your price as a percentage of the wealth you generate for your client. Now, in accounting, that one's a difficult one um, to kind of think about, just because as accountants, most of the times we're doing compliant work, we're doing tax returns, we're doing things that the clients just kind of dread doing, and they don't so much see us as wealth generators. You could argue that if you are in the tax world and you can save someone taxes, you are generating wealth, that's for sure. But you can't legally charge a percentage of the refund or something like that. But could you measure the wealth you generate to your clients? Now, you can generate wealth by giving them free time, by giving them more time to spend in revenue producing activities, by taking away costs, by maybe having employees be more efficient, or preventing them from hiring an additional employee by them hiring you to outsource their accounting. There are different ways to present the additional wealth you generate. It's this simple. If the client doesn't hire you to do their bookkeeping services, for example, they would have to hire a full-time employee, possibly. Full-time employee at the cheapest rate will cost, let's just give it a number, $2,000 a month, and they can hire you to achieve the same results for a portion of what you can save them. Let's say it's $500, 25% of that, then your clients will gladly pay the 25%. So it's important to be able to capture and identify what is the wealth you're generating, or at the same time, the money you're saving them, right? A penny earned, what's it called? A penny saved is a penny earned, right? So if you can save the money, you're generating the money. If you're generating them wealth, you can capture a piece of that. You can capture a percentage of that. And that's a really good way to present a service. And the last quote I'll show you here is Ron Baker's quote from author of The Firm of the Future and Implementing Value Pricing. Its value is subjective and pricing is contextual. Now, this is a very deep quote here, because it talks about the two areas in which price and value sort of contradict each other and at the same time complement each other. So value is subjective. That means that the eye of the beholder will tell you how much something is worth. For example, if I have a broken watch from my grandfather, which he gave to me and said, look, this is the watch that my father gave to me and his father gave to me, that's just a really high valuable piece for me, right? Because it just evokes a lot of thought that has a lot of personal feelings. Now, if I try to put that watch on eBay and I put it for whatever somebody's willing to pay for it, a broken watch, it's probably $10, right? Now, if I price it for $1 million, probably nobody will buy it, but people will start thinking, why is that watch worth $1 million, right? And if the person that's pricing it has credibility, you as the accountant, as a knowledge professional, have credibility, giving a price is very contextual. Giving a high price spells out quality, or a lot of people perceive it as quality. I'm not sure who said that, but I read that somewhere, that it said nobody got fired for hiring IBM. It's an old saying, nobody got fired for hiring IBM. I don't know if IBM came up with that themselves and as a marketing tactic, but IBM 20 years ago used to be known as the most expensive hardware provider. You could buy IBM compatible PCs anywhere you want, but nobody got fired for hiring IBM because it was the most expensive, and contextually, it has the highest quality. So this is a really, really important thing to think about. Value is subjective and pricing is contextual. All right, so we'll do the first CPE keyword. So please write that down. Gerbil, write down your first CPE keyword. Let me see if there's any questions here I can answer. So feel free to ask questions, put questions in the in the chat, please. It's a good time to put questions, and I'll answer some of these questions. I'll leave the CPE keyword for about a minute here, so go ahead and write that down. Okay, one of the questions I see here, I really like this question. What do you do, or what do you call it, when a potential client says, well, you're an accountant, this service should include everything: accounts receivable, accounts payable, the whole 9 yards. At this price, you should do everything for me. How do you explain to each of these it's a piece and not a whole? It's a good question, Lisa. So, Lisa, the way I would approach that is, before I even discuss what we're going to do, I want to discuss, and we'll talk about the value conversation in a second. I will ask questions about what they're trying to achieve. Once I understand what they're trying to achieve, and we know they're trying to achieve accounts payable, accounts receivable, I know that's what they're trying to achieve. I'm not going to offer a service that doesn't have that. So I am going to offer something that's high enough to cover whatever those additional responsibilities are. So right up front, you start with a much higher price that contains everything they want. And if they're looking for something lower, they take it away, but it's their choice. So instead of offering the core service at, let's say, $200, whatever that minimum amount is, and then say you can add this, you can add that, I would offer the entire service, what the value conversation told us they wanted. And then if they want to take stuff away, that's the power of options. So we'll talk about options, and we'll give those options up front. Okay, let's say, what about one-time services? Stephanie, great question. I personally am a big advocate of value pricing in my firm, but I still have hourly rates. I haven't killed completely my hourly rates. Most important thing for that is because I have a lot of one-time services. People say, hey, I need you for an hour. I need to pick your brain. And you know what? It's very difficult for me to sit down and try to value pricing a brain picking exercise. Now, could they extract a whole lot of value from the brain picking exercise? Yes, they can. But sometimes it's just not enough time. Just not enough time. So I still have an hourly rate for a 1 hour consultation, for a 2 hour consultation, for starting up. But anytime we're going to go beyond that to do a project, then we value pricing. Absolutely. Okay. Now somebody says, what about if you're starting brand new? I have a brand new firm. Isn't pricing lower the best way to build up your customer base? I would say the opposite. I would absolutely say the opposite. I would say that if you're in the position to start from scratch, pricing lower to build your customer base, it's probably an error for a couple of reasons. One, getting people to pay more in the future, it's very difficult. Getting people to just keep increasing the prices, it is very, very difficult. The other thing is, you don't stand out. Okay, you don't stand out. People will always look at you as the non-quality value provider versus the quality provider. So people will take a look at you as the low price provider as well. If I can't afford it, I'm going to go with a much lower or less quality service. So I would say, if you have the opportunity to start up, don't start low, start high. Now, that being said, you can have promotions. You can absolutely have promotions. So you can have a service that you charge, just to say a number, that you charge $500 a month, and the client, or you feel the client's not going to pay that because you're just getting started and $500 is too much. Then you can say, you know what? I'm willing to give you, just to say a number, $1,000 discount for the whole year. And the client goes, well, wow, that's pretty good. Then all you do is either give them the first 2 months for free or spread it throughout the year. But then it's very, very clear that when that year's over, you're back to that regular rate. But don't do what the cable companies do, which is just change the rate next year. Just give them a one-time credit in their invoices, or something that is your strategy to capturing clients, not to have a lower price, but you can have a promotional price. So I do think that, yes, you can have a promotional price. Somebody says here that, how do you calculate with value pricing an ongoing maintenance contract? Good question, James, good question. So an ongoing maintenance contract typically or traditionally includes up to 3 hours of service, up to 5 hours of service, that sort of thing. I would say it's very, very difficult unless your maintenance contract has unlimited. And that's a key important word to value pricing, is whether or not we want to insert unlimited anywhere there. The minute that you insert unlimited, it changes the entire conversation. Now, unlimited is risky. Unlimited is risky because some clients will exploit and abuse unlimited, and some won't use it at all. So I would say, James, I think inserting the word unlimited there, it's the biggest factor to being able to value price any sort of maintenance contract. Somebody else is asking, how do you know what the value is? You don't. You don't. Nobody knows what the value is. You try to extrapolate that from the client conversation. Yeah, extrapolate that from the client section. Yeah, from the client conversation. What if you give a high price and the client says no? Do you come back and say, what will you pay? Yeah, we'll talk about the value conversation in a little bit. One of the key questions that we ask is, how much budget do you have for the growth of your business? And then that evokes a whole bunch of conversations. So I would say, once you give a price, that's your price. You don't lower it. However, you will give them options. And through the value conversation, you will discover the low price service and the high price service. So I'm not advocating, by the way, I am not advocating increasing your prices for the sake of increasing your prices. I am advocating giving someone a price based on value and giving them choices. If they want to pay less, they'll make that conscious choice to get less. Okay, really important. How do you handle customer objections for the adding additional software like HubDoc? Good question. We'll discuss that in the third section. I don't even itemize those additional softwares for my client. If I believe the additional software will help me achieve the goal, I make that inclusive of the price. That way I don't even have to think about going into detail about what they're paying for and what they're not paying for. Okay. All right. So let's go to there's a whole bunch of questions there. So I'm gonna put them off for a second because I do want to get to the next content. On the next break, I'll answer more questions. So let's talk about making the transition to value pricing. In other words, having that value conversation with your client and discovering that value. So what are the components of an accounting service? And this can be split based on the perspective. So from the client's perspective versus from the accountant's perspective. So an accounting service from the accountant's perspective is broken into basically four things. We perform tasks, we apply knowledge, we monitor technology or data flow, and we take on responsibilities or take on risks, right? When we do a tax return, right, a lot of our clients have the perception that you as the accountant signing the tax return is taking a little bit of a risk, the risk of going through an audit, the risk of it not being accepted, the risk of having to answer letters for incomplete information, right? And taking on that responsibility or guaranteeing a result is the things that we look at from the accounting's perspective. Now, from the client's perspective, how do they see an accounting service? Well, they see it as tasks that they don't have to do because otherwise my accountant or bookkeeper is doing it. Things that they don't have to know or learn. I mean, so often clients hire professionals because they don't want to spend the time to learn something. I mean, the U.S. tax code, it's free and available to the public. When the U.S. tax code was created, it was, quote unquote, created with the idea that anyone can do their own tax returns. Now, how often do people actually sit there and read the tax code or read the IRS guidance, which is all available for the public? They don't. They prefer to rely on a professional. Now, lawyers is a little bit different because you need to be a lawyer to represent somebody in court and that sort of thing. But in our profession, almost everything that we do can be learned. I mean, we learned it. That's how we know how to do it. Why can't the business owner go to accounting school or learn accounting or learn how to do bookkeeping? Go to a YouTube channel and see 200 videos of QuickBooks because they don't want to, right? They don't want to. They love the fact that they don't have to learn it, and they want to rely on somebody else's knowledge. And that's what we leverage. We leverage our capacity for our clients to feel that they don't have to learn it because they can rely and trust us. From the client's perspective, what else is a accounting service? It's a functional system. It's functional information, applicable information, useful information, right? We provide a financial statement. They get functional information. You have to make sure that you understand that what we do, what we give to our client, is not the same thing that they perceive. And the last most important one is peace of mind or lower risk. Okay, that to most clients is a huge component of the accounting service. So if I'm going to go shop an accounting service, there are 4 things that I look at. What do I not have to do anymore? What do I not have to learn? What functional system or information I will get, and how much peace of mind and lower risk I will get. So make sure you have that in the back of your mind, and these are components of your conversation, right? Make sure that if you are taking away clients' requirement to have to do things, that you point it out. We're going to do it for you so you don't have to. That's a component of value. Okay, that's a component of value, and through the conversation, the client starts adding up in their head how valuable the service is. Now, unfortunately, accounting firms tend to focus on input components. We focus on labor hours, software cost, and direct variable cost. And that leads us accountants to perceive value on the things that are unrelated to what the client cares about. Trust me when I tell you, the client cares less than you spend 8 hours on their account, 1 hour on their account, 30 hours on their account. The client cares less, does not care. They care about the output, the result, the solution, the peace of mind, the functional system, the stuff they don't have to know or learn, the financial statement they can rely on. So when you're having that value conversation, right, don't discuss labor hours. Don't say, well, it's going to take me 20 hours a week. Don't discuss software costs. Oh, I have to pay an extra $30 for this. Don't discuss that. Because the client doesn't care. If you have a limited amount of time to have a value conversation with your client, don't waste it on input components that the client cares less about. Oh, I got to pay my employees overtime. No. Only focused and discuss on output, results, and solutions. The only 3 things the clients care about. Okay, so so what are the actual solutions from the client's perspective? Exactly as I mentioned earlier, doing data entry means the client doesn't have to do it. Doing a tax return means the client's out of trouble. Preparing a financial statement means you're giving them support for their decisions, helping them make better decisions, and taking the liability over compliance gives them peace of mind. Those 4 things, keeping you out of trouble, giving you support to make decisions, giving you peace of mind, and taking away tasks and things that you don't have to know are the proponents of value. Okay? So in this graph, real quick, you see that what the clients value most are lowering the risks and having reliable information systems. What the accountants tend to value the most is how long it takes to perform tasks or file tax returns and apply the knowledge. So just keep in mind that the most valuable thing you can do for your client is lower the risk and give them a reliable system with reliable information. Now, when we're discussing an accounting service, we usually have some issues. We have the issue with thinking that what the clients come in asking for is what they need, right? So a client comes in and says, "Oh, I need some compliance work." Okay, right? I need some financial statements from my bank, right? I need a financial statement from my supplier. Okay, I need compliance with an investor or a management team. However, We are going to provide those. We have to provide compliance services, and that's the core of our services. And typically, the needs are the commoditized services. Those are the hardest ones to price higher or to add value to. However, what the clients want are the things that they usually don't say. Okay, most clients don't say, look, I need an accountant to give me more control, increase my automation, and give me decision support. So at the end of the day, I can track my profitability, liquidity, and solvency, and understand where my numbers stand at all the time. No, that's typically not what they want. What they want is that compliance work. They want that thing that somebody else said you have to get done. So when you start talking about, do you want control? What does control look like? Okay, what control do you have now? What controls do you have now? How, as an accountant, I can help you increase your internal controls or your feeling of control. What are you doing now by hand that we can automate or try to automate, or look for opportunities and research opportunities to automate? What decisions do you make every day worried whether or not you're doing the right decision? And how an accountant or myself can help you make a better decision or give you supporting information. Now, people want to be more profitable. They want to have more liquidity. They want to have more cash on hand. And they want to be solvent. They want to be lendable to. They want to be able to sell their company. They want to be able to receive $1 million from an investor. So that's what they want. We want to speak to those four things: control, automation, decision support, and profitability, liquidity, and solvency. Okay? So what are the keys to effective pricing, right? Understanding the client's wants first, then understanding the value that fulfilling both needs and wants provide. Again, both needs and wants. But the wants are really the ones that can give you a unique service and that can really increase the perceived value. Price the service a commensurate to the value provided, a commensurate to the value provided. Leverage technology. I would say it is very difficult in 2016 for you to provide a high value service without leveraging technology. Leverage technology, because technology will free you up. It will give you excess capacity. With that excess capacity, you can develop your team members and share knowledge within the organization. Okay, I personally have a high hourly rate. Me, Hector Garcia, high hourly rate. And when I price my services, value priced, they're higher than the competition, higher than normal, higher than a lot of people that we know. But my clients know that I spend a lot of time sharing knowledge, a lot of time with non-billable capacity. So my billable capacity is small. That means it's more valuable to me and more valuable to them. Okay. So it's really important piece, leverage that technology, and then, invest quite a bit on educating yourself and sharing the knowledge within the company. Now, a couple of paths to discovering value. So we are sitting with our clients, with our prospects. We have all these points in the back of our mind. Now we understand, needs versus wants. We're having a conversation of what they want. First thing you want to do is lay off the service and talk about what you need us to do. Let's talk about problems and pain points. Okay? Define the scope that is prioritized, based on problems and pain points. You have to ask, what issues are you having internally with your accounting? What issues did you have with your previous accountant? I mean, this is one of the easiest questions to ask to a prospect that is coming from another accountant and shopping around or coming to you. First thing you can ask is, hey, what issues did you have with your previous accountant? What problems with your previous accountant did you have that I should never have with you? What is an underlying issue that is stopping your business from growing? Okay? If resources are limited, obviously we're going to look at the biggest, most important ones and then solve all the way to the bottom. When we present options, we want to have the highest option solve all the problems, and obviously the smallest option only solve the one biggest or couple of largest problems. Now, You need to have a conversation about trade-offs. It is important that trade-offs are part of the conversation. Okay, all decisions that we make that involve any resource, it's going to have a trade-off. So either we're going to sacrifice money, time, capacity, other assets. Everything we want is in trade-off of something we already have. Everything we want is a trade-off for something I already have. Okay? I have money, I have time, right? Our clients have money, they have time. They're either going to part ways with their money or part ways with their time. And when you help your client part ways with their money, but keep their time, which they can use to reinvest in their business, grow their business, reinvest in marketing, develop relationships, or for taking time off on their own and having work-life balance. That's a good trade-off, right? So make sure you discuss trade-offs, understand trade-offs. You're having a conversation and say, hey, what is more important to you? This or that, and write them down, because at the end, they will help you. Then the third step is to envision the results. So once we discovered all the problems and all the issues that they have, we wrote them all down, and then we talked about trade-offs. What are you willing to sacrifice to solve this? What are you willing to sacrifice to get that? You can ask that question. When the client says, my books are a mess and I want them fixed, and you say, what are you willing to sacrifice to get them fixed? People say, what? What are you willing to sacrifice? You want to pay somebody to do it? Or you want to pay somebody to teach you how to do it? Do you want to do it on your own? And hopefully if it comes out right, you want to do it on your own. And if it comes out wrong, pay somebody to fix it. What are you willing to sacrifice? What's your trade-off? That's the conversation. Then after we have the conversation, we envision the results. So then we take it into fast forward to a month from now. What do you think a successful engagement will look like? What problem will we have solved? And how will your business be different through my services? Ask that question, just like that. What would a successful engagement look like? What problems are we going to solve through this engagement? And how will your business be different through the service? And your clients will give you all the ammunition and all the information you need to set your price. They will tell you. They will start spewing their guts. And that information is the most valuable to set the price. So then after you capture what that vision is and say, look, I want to provide a service that helps us reach that vision. Okay? Then we arrive to a price so the client gets their money's worth. See, it's very difficult for the client to contextually pay for something if they don't know what they're worth. They don't pay for something for no reason. They have to know what they're worth. And sometimes we nudge them through the value conversation. The value conversation has two purposes. Okay? Has two purposes. One, for us, the accounting professional, to discover the value that they give to the solutions that we can provide. And two, to shape or frame their mind and remind them that what they want, it's valuable. And if we're going to achieve it, they got to pay for it. But if they pay for it, they'll get their money's worth. All right. So let's talk about some practical examples on how we handle specific questions, specific conversations. What is the most typical question that we get from a prospect, from a client undertaking a new project? The most important question is, or not the most typical question is, how much do you charge for accounting services? Or they say, oh, you're a CPA. How much is it to do my books? Very common question. Very common question. So what are some of the bad answers, or some of the answers that, again, I've given these answers and I've gotten into trouble, or it's been very difficult for me to recover from? Bad answer is, we charge XYZ per hour. Boo, bad answer. We have a minimum of $1,000 or a minimum of whatever. Bad answer. It ranges from $100 to $1,000 a month. Bad answer. And I will tell you why. If you give an hourly rate, at that moment, immediately remember, prices are contextual. if you give an hourly rate, immediately people in their mind will pass judgment. Oh, they're expensive. Oh, they're cheap. Now, me personally, I can enter $3,000-$4,000 transactions in a QuickBooks file in 2 or 3 hours. As long as you give me the data in Excel or give me the data in a readable PDF format, I can enter 3,000 to 4,000 transactions in 2 to 3 hours in QuickBooks. What's my hourly worth? My clients don't know that. I don't tell them that. So why does my hourly rate matter? If I tell my client I charge $500 an hour, the client's gonna immediately think, oh my God, he's expensive, he's unpayable, I shouldn't be talking to him, I'm wasting my time. But if they go ask for the same service of entering 3 years worth of data in 4,000 transactions, somebody else is gonna charge, well, I'll charge $3,000 or I'll charge $75 an hour or whatever. And the conversation is just not right. It's not apples to apples, it's oranges to apples. Because what I do with my hour is different than what every other person in the world does with their hour. All professionals are different. They all have different skills, all have different speeds. They all have different ways of looking at things. Okay? I had one client last year that I did an experiment with. I had 3 different staff members do the accounting for them. None of them knew. None of them knew that they were all doing the same thing. And we achieved 3 different financial statements, different net incomes, different assets, different liabilities, different categories. Now, you could blame that on bad training, or you can say people are unique and different, and every service is unique and different. So an hourly rate, it's a problem because of that. The other issue is we have a minimum. Now, I'll tell you, I don't hate the minimum as much as the hourly, but the issue with the minimum is that clients will always think about that minimum. So when you take on the project and the project is 3,000, they were like, well, I cannot budget it 1,000. This happens. It's a good discriminator. It does leave out some of the smaller clients by doing these minimums. But again, it's not commensurate with value. Absolutely not commensurate with value. And the last one is it ranges from a range. It ranges. Now, I like the range. It's not that bad. The problem with the range is that people always hear the first number. You try it. Next time somebody asks you for a price, just say it's between 200 and 500. And when you give them a price, you will notice they were expecting 200. Or they say, well, my accounting is not that complicated. It's very simple. It's very simple. And they start trying to push you psychologically into thinking that they fit into that lower range. Has it happened to you? Yeah, it's happened to me. So what are some good answers, or what are things that I think are good answers? Some of the good answers are, we believe on pricing our services based on the value that we're able to provide. We must understand your needs and expectations before giving you a price. Now, obviously, that sounds very salesy. It's not that easy to do right away, but you can look at different spins and different versions of it. Another answer you can give is, we guarantee our work 100%. You will get the results you will get. But we must first understand what you need before I can give you such a guarantee. How does that change the conversation? How does that change the conversation? When you go shop for a car and you ask for a price, if they tell you we're the only car manufacturer that gives you a lifetime warranty on the vehicles, but first we must qualify you as a driver of this vehicle to see if you're worthy of that lifetime warranty. So before I can give you a price and I'm able to sell you a car with a lifetime warranty, I first have to understand your driving habits. How does that change the conversation about buying a car? How much more would you pay for a car in which the provider evaluated you as a person that's worthy of a lifetime warranty on a car? It does change everything. Now, again, we are in the service business, not in the car business, so it's not a perfect analogy, but it's just a thought. Just a thought about perspectives. Another good answer that I like is, we prefer to give you a fixed rate rather than an hourly rate or an estimated price range. We must first understand your needs, expectations before giving you a price. That's not difficult. That took 30 seconds. And you veer off the conversation outside of hourly rates. Absolutely. Okay. Now I'm kind of a hybrid because I still have hourly rates. So I tell people, hey, I have published hourly rates for small projects. If I were to give you my hourly rate for presumably your large project, it would be really expensive and unfair to you. So I would want to discover what is it that you need, what are the results, guarantee the work 100%, then give you a price. If I take longer, it's my loss. If I take less time, great, because I can deliver the product faster. Change the conversation. Clients do not care about the time you spend. Now, I really like this starting line. I like, Mr. Customer, we will only undertake this engagement if we can agree to our mutual satisfaction that the value we are creating is greater than the price we are charging you. Is that acceptable? Clients will never ask you for an hourly rate once you make that statement. If you can do it genuinely and you can execute it, right? It is believable. Clients will never ask you for an hourly rate. Now that's not mine. I took that from Ron Baker, which I think in turns he took it from McKinsey. Okay, so Mr. Customer, we will only undertake this engagement if we can agree to our mutual satisfaction that the value that we're creating it's higher than the price we're charging you. Is that acceptable? I mean, there's no stronger, better starting line than that one. It is difficult to beat. Email me if you got a better one. I would love to hear it. Okay. One of our primary goals is to understand clients' expectations about their accountant's role in their business. It's a great conversation to start. And also ask why. Not once, not twice, 3 times, 4 times, 5 times. Why? Hey, I want you to do my books. Why? Why is that valuable to you? Oh, because XYZ. Huh. So why is XYZ so valuable to you? Okay. So why would you want to do that? Why would you want to partake on your money for doing that? Why do you not do that yourself? Why can't you do it yourself? Why can't you hire an employee to do that yourself? Those are great questions to ask, by the way. Most accountants think that asking questions like that are bad. No, they're good questions. Because when the client says, I don't want to do it, or I don't want to learn it, then you know that's valuable to them. That's the button you will press when setting up a price. But often the clients don't give you a clear answer right away. You have to get to why, 4 to 5 times until you get the real reason why you need this. Now, during this conversation, you want to also try to capture some of the implicit wants. Okay, so not many times they will tell you right away what they want. They'll tell you what they need, but they won't tell you what they want, and it requires for you to show a deep interest in their vision for their future, a deep interest for their work-life balance, a deep interest for what keeps them up at night, a deep interest for, why is their business not right now in the place that they envisioned it 5 years ago. Show a deep interest about what's stopping them from growing. And then that will be the fastest way to build trust. Take interest on the non-accounting portions of the business. Take interest on, why did you choose this location? Just ask that. Hey, why did you choose this city for the warehouse? Why did you choose Nissan trucks to deliver your services? Why do you have 10 employees? Why don't you have partners? Why do you have a partner? Ask those questions. Obviously not in a questioning point of view, right? Not in a disagreement point of view, just in a discovery point of view, understanding. And of course, the value conversation should be 80% the client speaking, 80% the client speaking, 20% you. And that 20% should be mostly questions. Questions. We think that as accountants and consultants, people value us because of our answers. And that's true. Once we're engaged, our answers would probably be the most valuable. But during the value conversation is questions. Okay. Now, is it wrong to give away something, a little bit of knowledge, a little tip, a little impressive thing that people go, huh, I didn't know that? Nothing wrong with that. But don't monopolize the conversation on that. Don't monopolize the conversation on that. So using past use cases, go, oh, okay, I had a client in a similar industry that had a similar problem, and this is what we do. We added value this way. And this seems like a similar case, a little bit different, of course. You got unique circumstances, but it looks different. So this is actually right up our alley. Is stuff that we love to do that builds credibility. And make sure all your questions are open-ended. Open-ended. All right, so let's talk about some of the discovery questions. So these are the specific questions that we ask during that discovery stage. First thing, ask permissions to ask questions. Okay, don't go straight to asking questions. Ask permission. Say, hey, Mr. Customer, can I ask you some questions about your business and your vision in order for me to understand your business better? Yeah, for sure, ask permission to do so. Look, 99% of the times, they will give you permission. They will absolutely give you permission. But, and it feels redundant, but ask permission. So then, what are some of the questions that I like to ask? Okay, what are some of the things that we can do or forget to do that will be a deal breaker? What are the things that we can do or forget to do that will be a deal breaker? The client tells you if you miss a deadline, that's a deal breaker. That's part of the scope of work. Never miss a deadline. That's value. Okay? Ask questions like, how would you define a successful relationship? Clients can say stuff like, well, you answer the phone whenever I have a question. Hey, if you're going to put that as part of your scope of work, call me anytime you have a question. That's part of the value. It could even be one of the options. And ask this question towards the end. If price wasn't an issue, how would you describe our ideal role as your accountant or consultant in your organization? If price wasn't an issue, what would be the ideal role? Open-ended question. Now, some clients don't like answering that because they think it's a trapping question. So you'll feel it out. If it feels like the client will answer that. Also ask, what is the cost of all the technologies you're using internally? What's the cost of all your technology? Accounting, not accounting, all of it. And if the client doesn't know, then you ask, it looks like a good accountant will give you that information, wouldn't it? Right? Drive some value. Also, if they give you that number, if they have that number, then you can say, hey, would you find it valuable for us to evaluate all these technologies and see if there's ways we can reduce the cost or leverage it more, or maybe increase it a little bit, but then lower your other costs, like insurance costs or risks or number of employees. Now, another question I like to ask is, if you have an accounting question, if you have a tax question, how quickly do you expect us to answer? How quickly do you expect? The best moment in time to ask this question is the value conversation. How quickly do you expect an answer? If the client says immediately, then immediately is part of your price. Okay? Because my clients that expect immediate answers pay much more than the ones that wait a week. Then after you get that, how do you want them answered? Do you want a brief email with a disclaimer? Do you want a full opinion memo with court cases and code citations? Do you want to just have a phone conversation or a combination of any? Now, these are not yes or no questions. These are questions that evoke a lot of conversation, because clients will tell you stories about how one time they asked their accountant something about a property. The accountant took too long and they didn't buy the property, and they made them lose potentially a purchase of a great deal. And at that point, you discover value there. How important is it to you that we guarantee our results? Or even better, that we give you 100% money back guarantee. That means that when we're finished, you're not satisfied, we'll give you your money and the relationship. How important is it that we include that as part of our engagement? Don't ask the client, would you like us to guarantee the results or give you 100% guarantee? Because they're going to say yes. That doesn't add any value. Ask them, how important is it? If they say very important, most important, then you know that's value. You insert that as part of it. That costs money. It costs money to do that. How much budget do you have allocated to business growth? Business growth. How much budget do you have for that? Now, at this point, your client will ask you, what do you mean by business growth? And if they ask that, awesome. Because now you're going to start talking about, well, increasing the price of your products, improving the effectiveness of your employees, growing your market share, etc., etc. Now we can have a deep discussion about what really they want. Because no business says, I don't want to grow anymore, or very little ones do. And also, a good question to ask is, do you want a specific list of extremely narrow, defined set of services that we're going to provide, or are you looking for a broad, dynamic scope of work? So you want us to give us a list of the only things that we will do, or are you looking for an engagement that is more dynamic, more broad, relationship-based, in which whatever happens, we will probably do for you anyway? And if the answer is the latter, there's a lot of value there. That has a premium. You have to add a premium to all these things. All of these questions here, all of these add a premium to the price. Now, once we get all those answers, our clients are not going to give us a numerical representation of value. They're not going to throw a number out there. Half the times clients are waiting for you to throw that number. But the conversation leads to discovery. Now, some of the questions that you start asking that will help you get closer to that number are, what is the cost of the firm not solving your issue? So what would cost you if we don't do this? What is your cost if we don't do this? Whether it's you doing it yourself, or you paying a penalty, or you getting your business closed down, or paying an additional tax, or whatever. What is your cost of us not getting involved? Now, as Joe Woodard said, what is the economic benefit that derives from the service provided? What is the actual extra money that they can make from our services? And what are the reasons your client is considering working with us or switching from another provider? You need to ask that. That's a really important piece, because people switch sometimes at a cost. They say, oh, they were too expensive. And you know what? If that's the reason why they switched, that's part of the conversation you need to have, because you need to know right away that this client is being a little value sensitive. Anybody saying, oh, they were too expensive, that means they're value sensitive. That means that they were willing to pay the service once, but not afterwards. That means they're willing to pay that price, but they were not getting the service in return. Now, options. When you're going to give a price, it's really important to give options. Now, I'm a strong believer of giving the client 3 options. Give it one option that's the lowest core service, the lowest we're willing to do, the lowest we're willing to take. Then the middle of the ground service, the middle of the road, which is going to be most of our clients, and then the highest end service that we will make tons of profit on, and the client will be extremely happy to pay because it will solve all the problems through the value conversation. Now, there's 6 T's of options that you need to consider. Timing. When we will do the service, when we will finish it, when we will start it, during what times we will do it. Yes, if our client wants us to log in to their QuickBooks desktop system, remote, nights and weekends, that's more expensive. Right? So if we have an option for us to do that, it's a higher price. If there's an option for us to log in only on their business hours, maybe that's a lower price. Terms of payment. Are you going to pay me 100% up front? Are you going to pay me afterwards? Are you going to pay me 50-50? Right? How they pay could influence their options. So if you pay your monthly services up front, I'll give you a price. If you pay your monthly services at the end of the month, I'll give you a different price. Talent. Who is the specific talent within the organization that is going to be engaged? That's part of the option. If a client says, I want you personally involved, let's say you're the principal, I want you personally involved. Now, they're not asking you to do the data entry. They want you personally involved in maybe some of the decisions or maybe some of the meetings. That has a value. Okay? You can give them an option. One option doesn't involve me at all. I'll look at it. I'll give it a blessing, but I won't meet with you. I won't talk with you to discuss a strategy. That's part of option 3. Option 3, you can do that with that. Technology. What technology are we going to use? What technology does the client have? If the client has low technology and they're willing to pay for it, and they're willing, they have low technology and they want us to work around that low technology, they gotta pay more. They've gotta pay more. The client doesn't invest in technology because we invest in technology, they gotta pay more. And the technology that we will include with our services can change the option. So if we're gonna include Bill.com, T-Sheets, HubDoc, whatever apps we're gonna include, that's one of our options. And in that option, that would be a higher price. Now, tailoring, it's about customization. Right? How much are we going to customize our services? How much are we bending over backwards for you to do that specific service for you? Transference, that's talking about transfers of knowledge. How much knowledge are we transferring? How much are we teaching you during this process, right? An engagement in which we do bookkeeping and an engagement in which we do bookkeeping and QuickBooks support and training, they're two different options. The one with support and training has to cost more. So as I mentioned, options are really powerful. Have those 3 options. The third option is the ultimate service that's going to provide the ultimate profit for the firm and is going to provide the ultimate solution. Most of the times you're going to get the second option, which in contrast to your traditional way, it would be more than what the first option normally would be. First option is still the lowest and we're still willing to do it. We're still profitable and the client still gets value. But some of those additional perks and wants should be on the second option. Okay? When the client wants a lower price, they must sacrifice something. And how do they sacrifice something? Through options. That's why options are great and that's why options are powerful. Because if you give somebody 3 options, whatever it is, 200, 500, and 1,000, there's no room for negotiation. There's only room for choices. When you go to McDonald's, you pick the regular for $5, the large for $6, and the extra large for $7. You don't say, oh, can I have an extra large but pay for that for $6? No. You're given the 3 options, and the options will drive the service. And if they want less, they have to sacrifice something. If they want more, they pay more. If they want less, they pay less, right? You want to match it with the value. Okay? And again, putting options together is a true testament of understanding your client's needs. This takes a very long time to do. It's one of the most time-consuming things is to give a proposal with options. But if you really want the client and you want to get the most out of them so they can get the most out of you, you give them options. Okay, so I'll just give you this quick 5 C's of value. These are really cool. These are from Thomas Nagel's book. 5 C's of value. This is just kind of the steps that we take, and this pretty much summarizes everything we discussed. Is we have to comprehend the value through the value conversation. We have to create the value through the service that we deliver, and then communicate the value. Let the client know that there's value there because they told you so. Because through the conversation they said, "You told me you value this." Communicate. That's why I'm going to give you that service. You told me you value immediate answers the most. So I'm going to give you that value. You told me you value peace of mind. You told me you value 100% price guarantee. So I'm going to give you that. Communicate it. And then you have to convince the customer that they have to pay for the value. Absolutely. You have to convince them to pay for the value. Value conversation helps with that. The proposal helps with that. And at the end, you're gonna capture a portion of the value you create through the price. So as long as your price is a portion of the value you create, you're good to go. So how do customers value accounting services? This is how they evaluate at the end whether your service is worth or not worth getting or worth paying for. The outcome. What is going to be the outcome? Is it going to be a financial statement, a tax return, an improved metric? Timing, not the timing we spend, the timing that we save them. Or when will the the service be complete? How fast, or the speed in which we deliver the service. A client that wants their books reconciled and financial statements by the 3rd or the 4th or the 5th of every month has to pay more than the one that wants it by the 15th or the 20th. That's a component of value. Access. How much access will they have to our knowledge, to our team, via email? How will they access it? Those things affect value. Of course, the guarantee affects value, and price, it being contextual. Just by giving a higher price, it gives the client the perception of quality when comparing it with other accountants. Now, in the same book, Thomas Nagel's book, Strategy of Tactics and Pricing, they speak about the 10 factors that affect price sensitivity. Now, this is on the handout, so I have explanations of each of these. These are really, really important. And these are really important components of understanding, what changes price sensitivity. But just to run through them real quick, perceived substitutes. If the client, by hiring you, compares your services with the substitute, that changes price sensitivity. If the substitute is higher, more expensive, like if it's more expensive to pay a penalty than hiring you to do it right, that's more value. Is it unique, or is it a commodity? Switching costs are really important too. If they're working with another provider and it costs money to switch providers, that changes the value. And in some cases, that lowers the value that they perceive. Because in their mind, is I got to change accountants, and on top of that, he's charging me more. So it's important to just keep that in mind. Difficult comparison is a really, really important. If you provide a service that's plain vanilla, they can compare it easily. But if your service is so unique and intertwined with so many things that we had in the conversation, it's difficult to compare. The price quality effect, that means that the higher the price, the higher the perceived quality. That could affect price sensitivity. Okay, so we have a couple other more, but again, they're in the handout, and I strongly recommend that you look at those. Those are really, really important sort of psychological factors to look at. All right, some of the great quotes that I like to discuss real quick. Ed Kless, co-host of the Solo Enterprise, he says, "He who liveth by the discount shall perish by the discount." And what he means by that, and I know it's a little quirky the way he the way he spells it, but what he means by that is the minute you give a discount, it's really hard to get away from. It's a big, difficult hole to dig from. So I would avoid discounts. Give your price, and the price is the price. Ron Baker's quote, which I spoke about earlier, which is the opening line to any conversation about value. Alan Weiss has a really interesting one. So Alan Weiss is the author of Value-Based Fees, and he one of the very first people to talk about value-based pricing, not in the accounting profession, but in general. So he says, when people knock on your door, credibility is assumed, and fees are whatever you say. If you're making a huge effort to bring people in, and people are coming in for a proposal, for a conversation, you got credibility. So prices are what you say. Don't let the client drive price or treat you as a commodity. The other quote that he says, and there's a little bit in contrast to the first one, is value, like beauty, is in the eye of the beholder, but is nonetheless discussable and mutually appreciated. You gotta have a discussion about value. You gotta understand it. Doug's leader says, when you focus on adding value, you become valuable. When you focus on getting paid for your effort, you become replaceable by someone who is more valuable. So good. Really, really good. So thank you, Doug, for that quote. And Dr. Reed Holden, author of Pricing with Confidence, says, it's not the price you charge, it's how people feel about the price they have to pay. how people feel about the price you have to pay. Okay, so let's go to the next topic, which is bundling accounting software and apps. Let me just skip to the CPE keyword here to just make sure that we don't miss it. So let me take some questions because I got some questions here. So write down the second CPE keyword, vulture. Write that down. Meanwhile, I'll try to see what questions I have here that I can answer. I give discounts for clients that for referrals, and we spread them over 3 to 4 months. Oh, Michael, I like that. So you'll give a client, let's say, a 20% discount of their entire annual service for giving you a referral, and then you give them, the discount to 2 or 3 months worth of services. I like that. But as long as the discounts stop and they're clearly defined, yeah, I agree with that. When you get started, of course, you know how to do the work, but how do you set the rates? Again, your question is it's still geared towards setting a rate based on your work, not based on the value you provide. So I would say don't set a rate. Talk to your client, figure out what you can do for them and what that's worth. How do you value price a combination price? I'm not sure what they mean by that. Like conversion to QuickBooks and training of staff. Well, that's good. So pricing a combination of things. Well, I mean, I would say Michelle, part of the options. Part of the options. One of the options will include the training and one won't include the training or ongoing training or training and support. Okay, let's see. Let me see. Start going to some of these questions. I think some of these I can answer. Some of these are really long. I can't answer. What do you recommend for pricing on-site training? That's a good one. On-site training I do on-site training, so it's a little bit difficult. On-site training, I typically just set it per day, which is basically an hourly rate in disguise. But what I do is I do give options. I say I can prepare the materials for you beforehand. And I prepare custom materials that add some value to the on-site training. I can say I can bring computers, or I can bring guidelines for people, or I can say I'll stay until whatever time until we're done. So we can do a couple of things to just kind of add more value to it and be able to add some options. Do you ask clients to do this, or do you put it in your contract? I'm not sure what you mean by that, Yvette. To do what exactly? I mean, you must have asked this like half an hour ago, so I'm not sure what I was talking about. Let's say, when a customer says that your prices are too high, do you negotiate with them? Maurice, no. I don't negotiate with them. I give them 3 options. I give them a lower service and then a higher service. If they think they're too high, then you have to stand your ground. You have to stand your ground. Okay, which is a premium? An extremely narrow set of tasks or a broad dynamic scope of work? Lucinda, a broad dynamic scope of work is the premium. Whenever the client says, I don't want a list of things that you're going to do, just do them. That's a premium, right? If you narrow or limit what you're going to do, then that has lower value. Some will argue that the budget question should have, do you have a budget, not how much is your budget? Okay, that's a good one. Okay, that's true. Michelle, we are the accountants and we are the ones that help our clients put together those budgets. But I like that either way. I think that, do you have a budget for business growth? It could be easily as good of a question. Yeah, I agree with that. Do you start with the highest cost service for all they want? Right? Yes, Michael. So we give the 3 options and we give the most valuable service first, and then we go down. Don't grow up, because psychologically speaking, people don't want to give things up. So once you present the one that has everything, you start with that. Like when you go to the car dealer, they never show you the base model first. They show you the one that has all the bells and whistles, and then it's harder to go down. It's just really harder to go down from there. Okay, so last chance for your CPE keyword. CPE keyword is vulture. So again, this is a 2-hour CPE webinar. So this webinar will take approximately 2 hours. I said at least 100 minutes. and we are approaching that. So I will try to get as closest to 100 minutes as possible, although we are pretty close to getting there already. Okay, so bundling accounting software and apps. The role of technology has really, really changed how we deliver our service. Technology has increased clients' expectations. Clients today are almost expecting things anywhere, anytime, and on their phone, which means we have to invest in technology. We have to invest in technology. Okay? Technology has also raised the bar in communications. Unfortunately, with social media and stuff, people are just used to getting immediate gratification on responses. Also, with web conferences and recorded videos, people are also looking for more interactive media or interactive ways of communicating with you. Phone and email is just not enough. I got some clients in South America that send me messages through WhatsApp. They send me a signed tax return through WhatsApp. No, that doesn't work, but they do it. But they do it. Bank and integrated apps are significantly decreasing the commodity, the data entry time. And we embrace those apps and we embrace that technology, helps us work faster and more efficient. But then our clients at the same time are also expecting you to do work faster and more efficient or more effectively because of those technologies. Now, e-commerce and globalization has actually added complexity. People selling in all different states, that added complexity, sales tax complexity. People selling all over the world and using PayPal and multiple currencies, that has certainly increased complexity. God knows one of my clients that I hate the most are the ones that have PayPal. It's a lot of work. It's a lot of work. And they got multiple currency conversions in PayPal. That thing is horrible. But you know what? It's what people are willing to pay for. Okay? They're willing to pay for somebody to help them solve their PayPal reconciliation issues. Now, QuickBooks Online specifically, what is it doing to the way we do deliver our services? Well, number one, daily bank feeds. Daily bank feeds are changing people's mind in terms of how often we work. Once a month or every day. With daily bank feeds, people could expect you to work every day. And you know what? If the client says, yeah, I want you to reconcile my bank daily, that's a big premium. Fortunately, with bank feeds, it's not that much work, but it is a big premium. Automated emails. Automated emails really, really increase efficiency. Okay, if we create an email that sends our client weekly an email of what we put under Ask Our Client account, or we get an email under the Ask My Accountant account, and we can be more proactive, that really changes how we deliver a service. Information available 24/7. Before, you had to ask your accountant for financial statements. Now they can log in themselves to get it. Collaborating with your client without having to copy a file or transfer a file or intervene or make an accountant's copy. That's really changing how we do service delivery. And a fixed monthly cost to the client or to the accountant with wholesale discount. That's a big difference because people are used to buying software once or every 2 to 3 years, every 4 or 5 years. Now we're paying monthly. So there's both good and bad of how QuickBooks Online is transforming service delivery. Now, what about apps? How are apps transforming service delivery? There's hundreds of QuickBooks compatible apps at apps.com. Now, apps consulting and apps integration, it's actually a service that people are willing to pay for. People are trying it themselves, and it's just not working. People are willing to pay for apps consulting and apps integration. Navigating through 300 apps in apps.com requires an expert, and that expertise is worth something. Absolutely. Absolutely. Apps like HubDoc are transforming how we get financial statements, how we get check images, how we get access to the bank, how we get those digital images directly from the bank into our HubDoc app. They're transforming our services, transforming how we work. And if our client doesn't have to drive to our office every month to drop off paper because we're using apps, that's valuable. That's really valuable. Apps can help you save time and they can add value in the interim. Now let's talk about some specific apps and specific value-added services that we can include in our options. So for example, if you have a client that has multiple businesses, one of the most valuable things for any business owner that has multiple businesses is a consolidated report. It is so valuable for anyone that owns 3, 4 businesses to get one report that shows everything. And God knows, doing a financial consolidation in Excel, a financial statement consolidation or combination in Excel, it's just a lot of work. And paying $15, $20, $30, whatever a month for QVinci or Spotlight, 2 big apps that do consolidation, and turn around and charge the client a premium of $200 a month extra to include the consolidation, it's way worth it. Absolutely way worth it. And you know what? Not a lot of accountants offer consolidation, or if they do, they price it way high. So we can use an app to do it super easy. Now, what about giving your clients control over their employees, knowing where their employees are? Forget about accounting. Forget about, we're going to do timesheets so we can put the payroll faster. No, we're going to give you total control of where your employees are physically through GPS tracking, and where your costs are going based on where they are and what project they're working on. And on top of that, we can expedite the payroll process, pay your employees faster, take away the headache of payroll, combine it with a payroll service, timesheet management. T-Sheets, great app for that. What about accounts payable management? What about giving your clients the ability to approve payments electronically? No need to go to the office to sign checks. No need to get a big stack of paper at the end of the week on Fridays, the payday, whatever happened to be. Right? Use an app. Don't tell the client you got to pay $20 for Bill.com. Just say, option 3, we will include accounts payable management. Pay for the Bill.com app. Take away the concept that the clients has to shop for apps. Apps are there for us to offer integrated services. What about receipt management? Not having to have all these papers. Good thing the IRS has planted into people's heads that you have to have 8 years worth of data in boxes. Receipts, paperwork. So everybody freaks out about paperwork. What if you say our most premium service includes complete document management? All you have to do is take out the app, take a picture of it, trash the receipt. Take the app, upload the document, trash the receipt. We'll manage it, we'll review it, we'll have it ready for you, we'll do an archive, we'll prepare you a package at the end of the year that contains bank statements, credit cards, receipts, because we can all get it from the app. As long as you take a picture of the app, we'll manage that process behind it. And we'll attach the app, the receipt to the transaction in QuickBooks Online, which the app does automatically, both apps. Okay? What about e-commerce multi-channel management? If you have any clients that sell online with multiple channels, Amazon, eBay, whatever, accounting is just so painful. And understanding what has been shipped and what hasn't been shipped, very, very painful. One of the most costly apps out there, WebGility Unify, very costly. Right? I don't have any clients paying less than $500 a month for this app. But man, this cuts out literally a full-time employee or 2, right? To manage everything electronically when it comes to multi-channel. So you can include that as part of your service. Again, that goes beyond our basic accounting needs, and it starts hitting the wants. It's the wants that we want. And if you don't ask those, what do you want? How do you want to make your business better? What keeps you up at night? If you don't ask that, you won't get leadway to talking about these things. What about customer relationship management? Hey, how are you managing your leads and proposals? How are you making sure your salespeople are following up with your leads? This has nothing to do with accounting, nothing to do with QuickBooks, nothing to do with being a CPA or a bookkeeper. And if your clients tell you, well, we have a big spreadsheet, or we have a paper, or we send each other emails or whatever, you say, you know what? I can take my work, my accounting work, and give you a baseline for your customer management work. We can take all of the history of all the invoices and the payments and put them on a portal. So when your salespeople call their client without accessing QuickBooks Online, they can see the history of payments and invoices. No access to QuickBooks Online, just their clients and their balances. You can use an app like Insightly or Method CRM for that. Okay? And lastly, full service payroll. right? ADP and Paychex has so much business. I think between ADP and Paychex, they write a fifth of the paychecks in America. A fifth of paychecks in America. A fifth of paychecks in America. So we can capture some of that. We can add some value there. We can do full service payroll through QuickBooks Online. Yeah, it's going to cost us $50 as an accountant, but we don't have to do anything. And the client, we can charge the client way less than what they can get somewhere else. Plus, it's integrated with QuickBooks. Plus, I don't have to remember 2 passwords to look at W-2s in one place and QuickBooks information in a different place, right? It's a lot of value there on full service payroll. Now, under the old method, we set a price typically by grabbing our labor hours from our employees, adding a markup, and coming up with a price. And then we take that price minus the labor hours, minus our desktop software cost, which was minimal. QuickBooks Online has really changed, increased the cost. It does. The apps in QuickBooks Online has really increased our cost. I will tell you that for sure. And that's how we calculate the profit. But under the new method, the price, which is hopefully higher because it's more commensurate with value, we have to include the SaaS software cost as part of our profit calculation. So I have an example with numbers here. And of course, for this to work, we have to have a premise. Okay. The premise is, under the new method, I will use QuickBooks Online and QVinci to consolidate financial statements. So the premise is, if I was using traditional desktop accounting software, which is probably $10 per client per year or something like that, because it's really difficult, so I put a $10 value there. Let's put 0. Let's assume QuickBooks Desktop is free. But then we're spending 21 hours to do the accounting in all 3 companies and consolidating them. Okay? And let's say we are able to increase our prices because we can deliver consolidations faster and digitally and cloud-based, and we can charge $1,800, but then spend less time and labor. Okay? And then, we pay $150 per month. Let's say we pay $150 per month for QuickBooks Online and QVinci. Before we paid nothing, or $10 a year, or $10 a month, not even nothing. But if we're able to save the time, we can be more profitable. Okay, that's kind of the concept there. If you look at the handout, there's more details on those numbers, right? Because obviously this slide doesn't make any sense like it is. Okay, what are some of the pros and cons of bundling software costs into the fixed price services for the clients? Now, what happened to my, okay, sorry. Pros: apps can save time, they can add capacity, they can help you deliver high value services. And typically the value that you add is 5 to 10 times the cost of the app. Typically, unequivocally, I've done the research. Help you create a differentiator on the service. It's not the service, it's service plus, and apps are attached to that service. And it's harder for the client to pick apart, well, how much is QuickBooks Online? How much is QVinci? How much is this? How much is the service? It's hard to pick apart, and it's hard to price compare. It's hard to price shop because not a whole lot of accountants are doing the same thing. Well, after today's webinar, a whole bunch more will, but not a whole bunch are doing it right now. Well, what are the cons? The cons are apps have a higher learning curve. Yes, you have to learn how to use them. Yes, you're going to have to spend some time using them. And even your clients are going to have to spend some time using them. There's an additional fee for an accountant. It costs more. It costs more to use apps. Okay? And apps may lead to certain clients thinking that the accountant doesn't do anything anymore because the apps do it all. Yeah, that's a potential con. That's true. That's true. All right. So the last section here is wholesale discounts for QuickBooks Online accountants. So this last section is really talking about if you believe in moving to value pricing, and on top of that, you're convinced that working with QuickBooks Online with apps, it's a good proponent of that, and it's a good helper to get you towards that. Let's talk about what's available for us for accountants through QuickBooks to be able to add QuickBooks Online for our clients. So QuickBooks Online, in my opinion, is the best tool to package value price services. The best tool for that. QuickBooks Desktop, better accounting system altogether, more mature, has more features. Yes, QuickBooks Desktop is that, but it's harder to provide a package value price servicing combining everything. So QBO is a much better solution for that. QuickBooks Online provides better experience for the customers, using it on the app, using it online, not having to use a server. QuickBooks Online provides tools to free up accountants to do higher value services, especially bank feeds. I would say number one, bank feeds. Now, what do clients value about QuickBooks Online? Anytime access to the data, access on the go, no IT drama, being able to use a PC or a Mac independently, integration with their favorite apps they're potentially already using. What do accountants value about QuickBooks Online? Number one, bank feeds. Bank feeds in QuickBooks Online are the reason why accountants love QuickBooks Online. I would argue the reason I like it the most. Oops. Collaboration, right? Collaboration, being able to teach your clients so they can do half the work and we can do the other half of the work. That's valuable, very valuable. Automating reports, automating transactions, no wasting time transferring data, and using apps to add a whole class of services. Now, if you're going to convert the client or onboard into QBO, there's a couple important things to keep in mind. If you're converting them to QuickBooks Online from QuickBooks Desktop, there are some implications. Number one, the conversion itself should cost. You should never convert someone to QuickBooks Online for free. Never. You charge for that. However, I do recommend that you pay QuickBooks Online service yourself. I do recommend as an accountant, you pay for it. That way you control the account. That way the client doesn't separate QuickBooks from the accounting service. If the clients have QBO already, you consider bringing them in-house, and you pay a discounted price for it. And brand new clients are great to start from QBO from the beginning. That way we don't have to deal with also training them on the difference between desktop and online in the case that they were already using desktop. Now, there are 4 scenarios that I'd like to discuss briefly in which we convert our clients to QuickBooks Online. Scenario number 1, going from accountant side desktop clients to QuickBooks Online. So there's pros and cons. The pros is hopefully we'll have time savings through automated reports and bank feeds, but our costs are going to increase significantly, right? Before, with our accountant side desktop QuickBooks client, we paid nothing or $1, whatever you want to call it, for desktop software, versus now we have to pay $15 or $20 a month. But the additional time savings hopefully pays for that. Okay. Now, what about converting client-side desktop clients to QuickBooks Online? That's a client that already had QuickBooks Desktop, already has QuickBooks Desktop, and you're moving them to QuickBooks Online. Again, now I have a new variable cost that I didn't have before, but you may be saving your client $250 to $1,800 a month a year. Sorry, $250 to $1,800 every 3 years if they're using Premier, a 5 user, which could be a client savings of $7 to $50 a month, depending on how you calculate it. So there's some value there, right? That value translates into a higher fee for you, for sure. Okay. Plus, your client would pay otherwise $30 to $40 for the retail version, which, assuming that they wanted to go that route anyway, so there's some value there. Also, there are some hidden savings that most people don't see up front, which is not having to do with servers, not having to do with IT drama, not having to do with backups. So there's a lot of value there and a lot of savings there. And if they save with that, that translates into more value for your services. And of course, the conversion service is something that the clients value because they don't want to do it themselves. They don't want to screw it up, and you can charge for that. Now, moving current QuickBooks Online clients to wholesale discount, it's also a good option. And then this webinar may run a little bit long, but we're going to go ahead and do the polling question right at noon, right? Because those are the 2 hours cap. We may go a little bit longer. Just want to make a side comment there. Okay, so before noon, I'll put the polling question up. So current clients that have QuickBooks Online, moving them to wholesale discount, that's pretty easy, right? Because the client already has it. All we have to do is us take over that fee. Now, in some cases, you can split the savings, right, with the client, right? So you can charge the client a little bit less of what they're paying already, but a little bit more of what you're paying. Or you can just hide the fee in your accounting service. Why? Because you can charge for monitoring service. You can say, look, I have access to the books. I will monitor it. If something comes up, because I'm going to set up certain automated reports, I can be more proactive. You can add tons of value there. And the last scenario is onboarding new clients into QBO from wholesale discount. So this is the best scenario in my opinion, okay, because it's a brand new client. We don't have to worry about price comparison. We don't have to worry about comparing the two platforms. And hopefully if the client, it's the right fit for QuickBooks Online, it's a good move. And also you can have tons of value-added services on the setup, setting up a chart of accounts, setting up a customer list from Excel, importing a customer list, setting up bank feeds. All these upfront costs to the accountant are lower on QuickBooks Online than on QuickBooks Desktop. Okay, let me go ahead and run the polling question just in case you need to leave right at top of the hour. So let me run the first polling question, and we do have about 10 more minutes left because I'm actually going to show you the process step by step on how to add wholesale billing if you don't already have it. Okay, so I'm going to run two polling questions. Don't put it in the chat. Don't put it in the chat. Answer it in the polling questions. So I'm gonna ask the two back to back. And yeah, this webinar went, somebody saying this is going pretty long. Yeah, sorry about that. I do get a little bit passionate about this stuff. So yeah. So there's the first polling question, right? Please answer it. We have 82% of the votes. I'm gonna close it. You must answer both in order to get your CPE credit. And then second polling question. Okay, so please answer both. And if you don't, if you can't stay past, you'll still get your CPE credit. I recommend you stay past. I'm gonna talk about kind of the steps for wholesale discounts, some of the frequently asked questions around wholesale discounts, and then I'll kind of have my final thoughts. I do apologize for it running long. Okay. All right, so we have 83% of the votes. Again, if you're just, you have to answer the second one too in order to get your CPE credit. Okay, I'll close the poll now. Perfect. Okay, yeah, so it is 2 o'clock. My maximum of is 2 hours. So we said it will be anywhere between an hour and 40 minutes at least, or 2 hours. So you still get your 2 hours of credit. If you leave now, you still get them. But I will cover a couple more things. I promise you won't take any more than 10 minutes, but this stuff could be valuable. Okay. All right, perfect. Okay, so wholesale discounts. So you can move your clients that you have in QuickBooks Online to wholesale discounts simply by clicking on the gear button on the top right and then clicking on My Account, and then click on the button that says Move Clients to Wholesale Billing. And then only for the clients that are already in your list, you're going to see a comparison. You're going to see what your client is paying now on the first column. You're going to see if they have Essentials, Plus, whatever. And then you're going to see what you're going to be paying under the wholesale discounts. Okay, so you get to pick and choose from there which ones you want to move over. And the minute you move them over, you're going to be paying, obviously, your fee. Okay, so you select them, and then I'll give you a contrast. It will say, well, before the client was paying this, now you're going to be paying that. So is the right move to charge your client for that as an itemized item on the invoice? Maybe. Is the right move to include it in your services? Maybe. Either way, when you control the accounting, it is possible that you'll have a lot more customer loyalty, and clients won't think about moving around because now you could completely control their QuickBooks Online file. Now you can also remove them from wholesale billing once they're in. Let's say, for example, the client disengages with you or the business closes down, you can just click on remove from wholesale billing, and then the client will now get an email letting them know that they have to add their credit card next time they log in. If they don't add their credit card, their QuickBooks Online account gets canceled within a number of days. I remember the exact number of days, but they have to have their credit card on file for that file to that account to continue. And of course, they'll be paying the retail price. Okay, so your client has to put, as I mentioned here, your client has to put the credit card once you get them off wholesale billing. Now, when you add a new client, a brand new client is going to ask you for which edition, Essentials, Plus, or any of the two that have payroll in it. And then once you select the edition, you will say whether or not you will pay, your customer will pay. So you can add your clients to QuickBooks Online Accountant without taking them on as wholesale billing. As long as you put my customer will pay, they pay. But if you put my firm will pay, which says wholesale in parentheses, that means that you'll be paying the fee. Now, these are the different options that you have. QuickBooks Online Essentials is $15 a month for accountants. The retail is $30. Essentials with payroll is $35 versus $69. There's an additional 50 cents per employee fee when you have payroll. $129 for the full service payroll. For Essentials with full service payroll, accountants pay $65. For the Plus edition, accountants pay $20 versus what the clients pay, which is $40. Online plus payroll, the accountants pay $40 plus to 50 cents per employee, and the Plus with full service payroll, which is $70. So the most expensive service you will buy through QuickBooks is Plus with full service payroll. But of course, I hope that if you're paying $70 a month, you're charging your client $300, $400, $500, $600 for the service, especially Plus and full service payroll. Now, there's a few things that you need to know about the difference between the two. There's a whole bunch, but the only ones that should be on top of your mind is with Essentials, you can have 3 end users. You can do both accounts receivable, accounts payable, recurring transactions, and multi-currency. And with Essentials, you can have 3. With Plus, you can have 5 end users, plus upgrade all the way to 25 for an additional fee. And it will add inventory, purchase orders, budgets, classes, and locations. By the way, budgets alone are a huge value-added service. A lot of accountants don't do budgets, don't get into that. So doing your service plus budgets, that could be a really good service. That could be a really good service you can provide, and it'll be way worth what you're paying for plus. Now, in the slides, there's a link where you can compare Plus and Essentials, and it basically gives you feature by feature a comparison. This could be something good to have printed out or something while you're having the conversation with your client. This is a really good tool also, right? The features that the software has sometimes mimics the services that we will perform. So you can use this as a cheat sheet to discuss, hey, who's going to be managing and paying the bills? Who's going to be, importing the initial customer list from Excel, right? Who is going to be tracking the inventory or how? Who's going to be doing budgets, or do you want to do budgets? Do you want to track billable time? So even this becomes a useful tool for that. Okay, and then the other on the payroll side, the only thing you need to know is with full service payroll, Intuit pays the taxes and files the forms. With the regular payroll, you as the accountant or the end user is the one that actually processes the taxes and files the forms. So retail price for that is $39 versus $99, and obviously half of that for us. Okay, so there's the feature comparison, and basically the full service means Intuit takes all the responsibility of filing the forms and paying the taxes. Okay, you can also get a monthly consolidated billing statement, and this is what it looks like, of all your clients, all the company IDs, which are really useful for technical support, the products that they have, which is basically going to be Plus and Essentials, and the price that you're paying. So that's what the bill looks like. And then you enter one credit card, and it gets filed automatically. It gets charged automatically, And you don't have to do it per account. It's just one for the entire account. So some of the frequently asked questions are, if the client has QuickBooks Online right now and they have a promotion, when should I move them to wholesale billing? I would say wait for the promotion to be over. Wait for the promotion to be over and then do it afterwards. Can I switch my clients to wholesale pricing? Yeah, as long as that they added you as the accountant, you click on the gear menu, click on your account, and click on your company, and then you will see the list of all your clients once you click on Move Clients to Wholesale. Can I add payroll to existing clients or switch to wholesale from one version of QuickBooks Online to the other? Yeah, that's really important. You can go up, so you can go from Essentials to Plus, but you can't go down from Plus to Essentials. And yes, if you have a client that doesn't have payroll, if you move them over, you can add payroll on top of that. Not an issue at all. If you can't, to cancel the subscription, all you have to do is disable or get them out of wholesale billing, and then it's up to your client to decide whether or not they want to keep it or pay themselves. My clients will not see the bill. So your clients will not know how much you're paying for QuickBooks Online. They will not know. So they won't know you're paying 20 or whatever, or 15. They won't know, right? They won't have access to that. Okay. Do you have to enroll it to a program? No. All you have to do is have a QuickBooks Online accountant account. And as long as you have a credit card on file under the wholesale billing portion, then you can certainly have that without having to enroll or anything like that. So you get one consolidated bill, which you can access through the portal, and you will get a separate one for the payroll portion. Okay, the payroll, it will be a little bit different bill. Okay, that question was repeated. And then, so these are my final thoughts. When not to use wholesale discounts, right? So obviously, spoke here for 2 hours, made a couple of important bold points. If you think your client will not pay your services, right? Or you think they won't pay your engagement, or your engagement will be very short term, don't do wholesale billing. Just have the client pay for QuickBooks Online, because it'll be more headache than what it's worth. Only do this for clients in which you have a high level of trust, and you know that they're going to pay you. Right? Otherwise, don't do it. You're taking on a cost and then not get paid by your client. Some accountants tell me that when they take on a wholesale billing, they'll charge the client a whole year's worth of accounting services up front, or a whole year's worth of QuickBooks Online services up front. That way, if they falter 1 month or 2 months, they're not left behind with the bill. So really good point. If your client has QuickBooks Desktop and they need those features and they don't want to go online, don't cause a service break just because I want to move them to QBO, right? Keep them on QuickBooks Desktop. Right? It's too hard right now to really truly compare the two, right? The QuickBooks Desktop has a lot more features than QuickBooks Online. Not every client's a good fit. So I'm not trying to convince you that you should move everyone to QuickBooks Online. Absolutely not. Okay? But if the client's a good fit for QuickBooks Online, then move them to QBO, move them to wholesale discounts, and apply value pricing right away. Okay, so my final thoughts. If you price based on value, you'll be inclined to improve your service. It is amazing. It is amazing. When the clients pay more, how much more you will do, right? You will just be encouraged to just do more and provide more. And think about the clients that pay you the most. Your best clients, they get the best attention. They get the white glove treatment. So don't price higher, or don't value price because you want to get more money out of them. Value price because you will provide a better service. Customers like predictable pricing, even if it's higher. They'll like predictable pricing. You will find that customer loyalty goes up when the expectation is set right. You will get more referrals, and most importantly, quality referrals. When clients agree to doing this, to price on value, they will only give you referrals that they think will also pay on value. And leverage technology. Research what's out there. improve your effectiveness so you can provide a better experience. And make sure that you do not provide a commodity, that you're not a commodity, that you're not comparable. What you offer cannot be compared with another accountant. It can't. Otherwise, it's not valuable. You can't value price if you can't discover the value. And you can't have value if you don't have a unique thing to offer. And use and leverage QuickBooks Online Accountant for wholesale discounts. It's one of the best way for you to provide a unique value proposition, because you're attaching one of the most popular accounting systems in the world. You're attaching it and you're co-branding yourself with QuickBooks because it's part of your services. Accounting services featuring QuickBooks, right? All right. Okay. So sorry we went super long. We did cover everything, and gladly we didn't rush through anything. Let's see if there's any questions from the Intuit team that's listening. Do you want to ask me any of the verbal questions? There's quite a bit. It's hard for me to read them all, but are there any questions you think I should have answered? Okay. All right. Perfect. Okay, so that's it. Thank you very much for joining us. Again, your CPE certificate will be sent to you within 2 weeks. If you want to ask me a question directly, you can just email me. My email is hector@garciacpa.com. I'm putting it on the chat there, hector@garciacpa.com. Please use the guide. I think that if you endure the 2 hours here together, it would be valuable for you to print out this guide too. If you didn't get it for whatever reason, request it via email. I'll send it to you. This guide contains all the slides, but more in a sort of PDF guide format. So I think that could be useful as well. Thank you for participating. Don't forget to provide the feedback. Feedback is very important to us. Let us know whether or not you think we should do more webinars like this or do a different topic. Okay. Otherwise, thank you very much. Have a wonderful day.